Hi guys, welcome back to my channel, and in today's video I'm going to tell you about reversal and both side patterns, and it's our last module about patterns. If you're new to this channel, please check all my previous educational videos right here and don't forget to subscribe. So we're going to start with reversal patterns. This pattern shows us that our previous trend is going to change, and this change is made by consolidation, as all patterns are. So there are four types of these patterns. The first one, head and shoulders, reversal head and shoulders, double bottom, and double top. And let's start with head and shoulders. And before we start, I want to admit that all these patterns, they're really logical. You don't have to memorize these, because if you understand what trend is and how does it work, you will understand all the patterns I'm going to show you now. So head and shoulders. This pattern shows us that we had a previous uptrend, then we have some sort of consolidation, and then we're going to have a downtrend. Why so? Okay, just remember then how uptrend is formed. Every high is higher, every low is higher, everything is going to be higher and higher. It's uptrend. And remember what downtrend is. Downtrend is when our lows are getting lower and highs are getting lower also. It's downtrend. And what we have here in head and shoulders, we have the first shoulder, it's our high, which is higher than previous, all this one. Then we have new high, which is also higher than previous high. And we got low, which is also higher than previous lows. Everything's fine, we have uptrend. Then our head is completely done and we also have uptrend, everything is okay. And then we're starting to form our low. And this low is not higher, it's on the same level, or it can be just like a little bit higher than previous, okay? It's the first sign that we have something not uptrend here, yes? And then we're going to make this shoulder. It's new high, which is not higher. It means that we have new high, which is lower, and it means the beginning of a downtrend. But you are not allowed to start your position right here. You have to wait when your low, this low, I will mark you at this one. Sorry for that. When your low will be breaking down, because it will mean that when candle close above this low, it means that our lows are getting lower and we already have our highs are getting lower, and it means that we have downtrend here, and you're allowed to open your position right here, right when you have your candle closed above the previous low. Okay, and where are you going to put your stop loss? You're going to put your stop loss about this previous high. Why so? I will explain it. So it's because when you have this high and when you have candle which will close higher than this high, it will mean that your highs are not getting lower anymore. So it means no downtrend anymore. It don't necessarily mean that it's beginning of uptrend, but it's not a downtrend anymore and your sell idea is not valid, okay? That's why you have to put your stop loss in that position where you think that your idea will be not valid anymore. It's the logic here, okay? And you put your stop losses here. Where will be your target? Lots of books they write that lots of YouTubers talk that you have to measure the distance between, let me show you, between the neckline, this it's this line which you make from lows, okay, between shoulders and the head. So you make the distance between neck line and the shoulder and the head tip. You took this distance and put to the candle which make this breakout. But I don't totally agree with this, because you have to take a look on all the situation, okay? You have to understand where were the previous lows of our uptrend. You have to measure where was horizontal volume. You have to understand all the things. Maybe you will find some zones of consolidation, something like that. And considering all the facts, it will be your target price, okay? What's really important in head and shoulders, it's always reversal pattern. You don't allow to find these head and shoulders somewhere in a downtrend it's not going to work because it's not about downtrend to uptrend. It's about uptrend change to downtrend. Okay, and this is the main idea. You don't allow to find these head and shoulders on somewhere in a flat range or something like that. You have to understand this logic, and if you understand this, you'll find your proper patterns and they will work for you. The same situation is about reversal head and shoulders. It's right here. It's but it's completely mirror, and we have downtrend first, then a reversal head and shoulders, and then we have uptrend. This the idea is the same because you have downtrend where everything's going down, highs and lows are getting lower, and then you have your shoulder, okay, then you have your head and everything's fine, you're having highs and lows getting lower, and then you have boom, your new high is on the same level, it will be neck level, or so yeah, it's, and then we will have your shoulder, it's a new low, and this low will be higher than a previous one. Just take a look at this, okay, it's higher. And when you have your highs getting higher and lows getting higher, we have an uptrend. But you need to wait when the breakout occurs here, because you need to wait when your candle will close higher than the previous high to make the picture complete. Okay. So we have a hand and shoulder here, just a reversal, and then we are going to wait for the uptrend. Okay. And what's important here that stop losses and target prices are everything the same like in head and shoulders. I'm going to show you a few examples here on a chart. So here we have euro dollar. I understand it's not a crypto, but the first example that I found out here. And what I got, we have here uptrend, like a small uptrend, because our highs and lows are getting higher. These are our lows and here is our highs. Everything's going higher and higher, and then what we have our shoulder, everything's fine, highs higher, lows higher also. Then we have our head, everything's also fine here, and then we have our the beginning of our new shoulder, and here you have to notice that this high is lower than this high. This it means that our uptrend stops, and now we have to wait when we break this line, you know, this low. We have to close our candle lower than this low. And how you open your position right here and you put your stop losses about this shoulder and you wait. We're going to wait. We're going to close your position. In this exact situation, I'd like to say that I will close somewhere like here and here, because I see these previous laws and I think that they are really important. I put all these previous laws for me just to see target, and boom, here you can understand and here you can see that we almost hit all the targets, almost. Okay, so that's how it works. And it was head and shoulders, the same with the reversal head and shoulders. Now I'm going to take a look at our next reversal patterns. They are double tops and double bottoms. They are also reversal patterns with the same logic. Logic is really the same. Okay, so we had, for example, let's start from double top. We had uptrend with everything going higher and higher. Then we have our new high on the same level as the previous high or even lower. By the way, when this one is lower, when this new high is lower than the previous high, it's like stronger because you don't have on the same level, you have even lower. Okay, and we have highs are not getting higher anymore. We are going to wait for the lows are getting lower, so it will mean that we are waiting for a breakout here. Yes, we open our position, our short position, right in the position when we have our candle closed above the previous low, and you put your stop loss above this high. Okay, and about targets, target will be the same. You have to look on the previous lows. You have to look on the previous zones, maybe some resistance, some support, just understand the situation in general overview. And the same thing with double bottom, because you have downtrend where everything's going lower, and you have your new lower, not lower but on the same level or even higher. Yes, you notice this thing. Okay, then you are waiting when you have your highs getting higher, you wait for this breakout. But what I mean wait for this breakout, I mean when the candle is completely closed. Okay, and you open your long position right here and put your stop losses for the same logic under this law, and your target will be according to these previous highs as a target. Okay, and some examples from the chart. Here we had a real great example of double top. So we had uptrend here. Why so? Because every low were getting higher and every high were also getting higher, and that's why we had an uptrend here. And then we noticed that in this particular situation, our highs were on the same level. They were on the same levels. So our highs are not getting higher anymore. It's not an uptrend anymore. And you have to think. Then we put this neckline, and it means that we are waiting for this neckline broken. And this candle was closed right here. So it means highs getting lower, lows getting lower. You can open your short position, stop losses above this high, and your target price will be all these lows. Okay, just take them into consideration. So all these lows, there's my target price, and just take a look at this. Just take a look, okay? So it was all about reversal patterns. Now we're going to take a look at both side patterns. Both side pattern means that when you see this one, it can be both continuation or reversal. We don't know for sure, but you have to understand why so. So the really great example of both side patterns is a symmetrical triangle. You can have previous downtrend or previous uptrend before the formation of this pattern, but what do you see next? You see that every high is getting lower and every low is getting higher. There is no trend, it's a pure consolidation. And what's going on after that? No one knows. Yeah, because you don't have any features, but there is some sort of probability that when, for example, before this triangle was formed, you were in a downtrend, it's more probably that you'll go downwards after that. And the same is upwards. When you have uptrend before this triangle formed and after triangle breakout, you most probably going to go higher. What I recommend you to do, I recommend you to take a look on this. You have to take a look what price is going on here and where will be the breakout. And after the breakout, you have to make your decision. Okay, and you have to understand the general situation in the market, you have to understand the local situation, also put your targets like the same. And where will be your stop losses? Stop losses I recommend to put here about your previous high, about your last local high. So for example, we have a breakdown, we have candle closed here, you put in your stop losses about previous high, and your according to your targets you will close your position, and of course some examples from chart. So here we have a great example of a symmetrical triangle. We had previous uptrend because we have our lows getting higher and our highs getting higher as well. And after then we are in a sort of consolidation, which is a symmetrical triangle. And we see that every high is getting lower and every low is getting higher. We don't really understand what's going on, so we can predict, yes, but once we have this candle closed, yes, once we have this breaking out, once we have our new high is around here, you can say that this is going to be a bull signal, okay? And you open your position when you have your highs overhide in this particular situation, and you put your stop loss above previous low, somewhere like this, and where will be your target? Your target will be, you have to take a look on higher time frames, because here we have nothing, it's just empty. And I usually recommend, just when you don't know any target, close 1 to 2 ratio, just it will be enough for you. And but if you have somewhere something in the left side here, you can put your targets for sure, no problem. Okay, and this was all about both side patterns and reversal patterns. I hope guys you really like this video. This was our last video about chart patterns, and don't forget to make your back tests before you make any decisions. You have to find really hundreds and thousands of your situations and a history and a chart, and only after that trade. It's just my opinion, not a financial recommendation. Don't forget to hit the subscribe button. Don't forget to write a comment below. I really appreciate that. I really like when you put your like below this video, and see you next time. Thank you.